Good morning, everybody, and welcome to the Daily Energy Markets podcast. We have Brent crude oil this morning trading down 0.5%, getting back towards that $70 a barrel on Brent, where the price has been stuck for some time, occasionally above, but increasingly regularly below. Let's kick off this morning with Mukesh Sadhav, Global Head of Commodities Markets Oil at Rystad Energy. Mukesh, your thoughts on where geopolitical risk premium is in the oil price at the moment, and does the move towards a ceasefire in Ukraine, is this the momentum to sort of anchor it below the 70 handle rather than above? Your thoughts?
Thanks, Sean. I guess the geopolitical risk is kind of wavering on a daily basis, right? And now we saw the ceasefire talks in Russia side, but then we saw the bombings in Gaza, and then there is a heightened kind of, let's say, sentiment on something will happen in Iran, right? I think that risk premium is probably holding the oil price where it is. If you remove those, probably from if OPEC wants to bring barrels back, we are in the shoulder months, the price could have probably gone down a bit more. So it's holding. The risk premium is not lifting, but it's holding at where it is.
Let's welcome Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Mike, there was a period in this, what seems like a lifetime, but it's only 6, 8 weeks since Trump became president again. But ultimately, he kind of went into the first period of Trump, or maybe any period of Trump or any president for that matter, that he's very guided by the performance of the stock market as some kind of a North Star. He seems to have abandoned that. But then there was also a sense that he's also guided by North Star by the price of gasoline at the pump, and the idea that prices would go lower. And then he sort of comes into this bellicose rhetoric about bombing all over and so forth. So I'm wondering, what's his North Star on gasoline prices? Should we be guided by that? Should we take that as any kind of direction of travel? Your thoughts?
Yes, energy prices, bond yields lower is basically his North Star. And they both, certainly him and Bessent, have pointed out clearly that expect a period of correction, maybe a little bit of adjustment, because what they're doing is significantly a shift. It's a discombobulation of something we haven't done in this country in 100 years. Pretty significant austerity and the tariffs, and the U.S. has a pretty significant glut of energy, and LNG, natural gas, crude oil, you name it. So it's all means the key focus, I think, is for getting things is move fast and break things. It's clearly what they're doing. So I think it's going to translate into the average gasoline price in this country around $3 a barrel. By the time we get to the midterms next year, probably closer to $2, not a barrel, a gallon. Crude oil, average cost of production in this country is around 56. It's gravitating towards that price. That's not profound to say. That's usually what happens. And that's the mantra of the Trump administration. And the key thing is, don't underestimate this person who was in exile for 4 years, that got a second chance and had a couple assassination attempts. That's just keep focus. I mean, he's energized the world, maybe not in a good way, but the focus is he has pre-existing trends in his favor. We had an increasing glut of crude oil and energy in this country. We have the increasing excess supply out of OPEC, and we have declining demand from China. Just the big announcement yesterday that BYD's new vehicle can charge in 5 minutes shows you where things are going. So in the macro, I think he's willing to put up with lower equity prices now in the short term for better things later. And right now, everything's tilted, in my view, towards deflationary trends, most notably in energy.
And just to add a follow-up on that, Mike, he's also mentioned recession. I mean, is he essentially, is that part of this sort of pain medicine, if you want to call it, that recession gets him what he wants ultimately? If you break the economy, of course you're going to get lower bond yields and lower gas energy prices.
Pain for the gain. You better get that pain over soon. That's a mistake he made last time. So I think that's the key thing. Bessent gets it. So here's a scenario I'm pointing out. If you can get the equity market to go down, that's going to force the Fed to ease. Right now, there's nothing that's going to really force them to ease. And of course, we can get lower mortgage rates, so we can get lower yields. This is the key thing that'll be the focus for the midterms for next year. And you can say, okay, we've lightened up that housing market. It's so tight. We can make it more cheaper for people to buy things. And the only way to really have that happen right in the stock market going down. The problem with the stock market in this case is at the end of last year, it was 2 times GDP. Historically, that's about the highest in 100 years. And it's just starting to revert lower. So what I think we're going to see tomorrow from the Fed is a hawkish Fed, because actually and their PCE inflation numbers are ticking up, yet growth and things are ticking down. They can't do much. So overall, I think lower stock market solves a lot of problem. It really relates the inflation. It kicks in the Fed to easing, and it gets the Trump administration to where they want. But they do know, that's one thing about Vicente as a trader. He understands that markets kind of have to revert a little bit from their very expensive levels. And crude oil is part of the deflationary forces leading that way.
Let's welcome Jose Shalhoub, policy and energy analyst at Jose Pereo and Associates in Caracas. Jose, inevitably, we want to talk about Venezuelan crude oil. We saw Trump sort of retract the Chevron license to produce and export crude out of Venezuela. Your outlook for that going forward, and can PDVSA take that up and maintain those export levels?
Yeah, thank you. Well, inevitably, we're back to square one. I thought that Trump 2.0 could take a little bit more pragmatic view in his new administration towards Maduro, as many thought he would be. Well, we saw how
I suppose if Maduro had taken back those, those migrant workers, or et cetera, that maybe that was the gateway to a more suitable or a more accommodating relationship. Any reason why he didn't? Why that was such a problem for him to take those migrants back? They end up now, I think, in some hellhole prison in El Salvador.
El Salvador, exactly. And he was willing to. Initially, that's why Richard Grenell came to Caracas and met with Maduro. And the Venezuelan government, pragmatically was interested in moving ahead with that, because the government was not interested in having Chevron leaving the country, But apparently now PDVSA is kind of a little bit more ready to confront that situation if we see, finally Chevron leaving the country, as well as with these other services companies like Schlumberger, Halliburton, and Weatherford still operating in Venezuela, leaving the country as well, We saw recently how Maduro and Putin declared that Venezuela and Russia would sign, are signing a strategic cooperation treaty for the next, 20 years in oil and other fields. But definitely, I don't think that Russia can cover those 210,000 barrels that Chevron was producing that quick, because that's Chevron has been present in Venezuela for the last 50 years or so, and they are used to work in Venezuela. They know the country. PDVSA has been alleging that with other private Venezuelan companies, it could recover that production. We're still waiting how Eni and Repsol are gonna, be with these decisions, because they are still operating with PDVSA and swaps. An exchange of condensates and with oil from Venezuela. But definitely, I think PDVSA is kind of a little bit more ready and prepared for that situation.
Let's look, Mukesh, a little bit and sort of pull back. Obviously, Venezuela's supply picture is quite critical for Gulf. The Gulf refineries there in the United States, the Gulf of the Americas, as Donald Trump likes to call it, those refineries are set up for that. But if we pull back the lens at the wider OPEC Plus, I want to get your thoughts. I know you guys at Rystad Energy have been looking at the sort of total liquids exports, and that OPEC Plus has been sort of disguising its exports by turning a lot more to increasing capacity of products. So I just wanted to get an update on that from you, given now that we are going into next week or in 2 weeks' time, a period when OPEC Plus will start to actually increase officially crude oil exports.
Yes, Sean, I think before I comment on the OPEC Plus, let me give a little bit more color on what's happening in the north of America from Canada, as well as Venezuela, as well as Mexico, as really the water problem, and how I see the US markets. And we know that from now till August, right, when the peak refinery runs come, the global refining system will be hungry for 3 million barrels per day more crude oil, almost 1.5 million barrels per day. The hunger will come from the North American and the European markets. So we are anticipating some increase in the refinery runs going forward, because I believe nobody would want to be in a stock challenging position when the summer comes, right? If you look at that picture, if US has challenges in getting the barrels from the north, getting the barrels from south, Canada will go into turnarounds, a 500,000 barrels loss in April, and you lose Venezuela, you lose Mexico. I think I would use the phrase, the entire US crude markets was about blend baby blend. That's my new kind of thinking. And if US is not able to blend the heavies and the light barrels which they were producing, and that's how they were able to sort of reduce the dependence on the Middle Eastern imports. So with that picture, their blending will struggle. I guess there is a
Blending,
room for.
sorry, just to clarify here, the blending of the Venezuelan heavy crude, which is the natural importing crude quality that the US refiners like, they lose that, there's no replacement.
Correct. I would say that US is a big, huge blending play. When they buy the heavies, they buy the lights, they create a
From Canada
cocktail.
and Venezuela
Yeah,
and
Canada,
Mexico.
Venezuela. Yes, yes. And they created the look-alike crudes for the Middle Eastern. Now they have this blend, baby blend problem, I guess. They can't do that, which they were very successful at. That leaves room for some OPEC barrels to come to the market. And we have already seen that the Iraqi imports into the US is probably touching higher levels. Not a big number, somewhere around 260, 270 KBD. But we have seen that movement. So I guess with that situation, and Trump keeps that situation the way it is, I think there is room for OPEC barrels to come to the market in the summertime. But after the summer, then OPEC will have to be again in a situation that if the refineries will go into turnarounds again, then OPEC might have to cut again. So I guess that the product handle, the crude handle will continue to be played, but till summer, OPEC has some room to bring barrels back.
Mike, looking at that question, OPEC plus bringing back barrels, which caught everybody by surprise because the expectation was that the Americas would be the ones to bring all the barrels back, not barrels back, but continue to increase capacity, whether it be Guyana or even in the US in terms of the shale patch, especially with all of the softening of regulatory oversight in the US under Trump. Where do you think that goes now? OPEC Plus goes on this journey of bringing barrels back in a fairly limited demand growth market. Does the US production pull back? Does America's production pull back?
No. The number one force for make American production to pull back is lower prices. That's why I still think it's very not profound to expect the bottom to come around $40 a barrel for this whole cycle to be over. That's what's happened the last 20 years. Every time crude oil stays above 100, it brings on those forces of elasticity, more supply, cuts off demand. And now it's just kicking in, accelerating now with the most risk assets like the stock market still very elevated. So I think, crude oil might have some bounces, maybe get to 75, but I don't think this whole cycle's over until it gets below 40. And that's the number one force of the cutoff supply. You need that lower price cure, just like the high.
What is that in the context of the US? We already have WTI in the mid 60s, has been for quite some time.
$40 a barrel has been the significant low the last 20 years or so. That's needed to shut off that excess supply. The average cost of production in the US, according to Bloomberg New Energy Finance, is around $56 a barrel. So right now, we see that in the curve. We've had backwardation when the further out prices are a little bit lower. People call that bullish. It's not. It's normal backwardation. What's happening is a lot of the producers know they can sell forward and still lock in profits, and then they're doing some of that.
Maybe
Jose,
Sean,
sorry, go ahead, Mukesh.
can I ask Mike a question, because that prompted me? I wonder that there was a time when US was producing more than 1 million barrels growth, right? And 2018 was the bumper year. I believe US shale is not a shark, or I call it a very slow moving whale. Between March and August, we don't see much growth, is a very flat number. So I believe there is not a lot of growth in US shale, which needs a lower oil price and killing with a lower price. So how do you square? If we were talking about 1 million barrels plus growth, then I understand. But we are already at very lower numbers of growth projections. So how more you can sort of reduce it?
Well, that's the key thing, I think, is there's one of the most enduring trends in commodities is increasing supply of crude oil, energy, liquid fuels out of the US and decreasing demand. Now it's a pretty significant surplus. If it's just US alone, it's around 4 million barrels a day now. If it's US and Canada, it's around 6 million barrels a day. That's been going upward from the lower left to the lower upper right for decades now. It just crossed over around 2000. Well, basically, it's really crossed over around 6 years ago. So to me, that's been one of the key things. And it was basically in 2022 when everybody said, oh, China demand is going to cut off and shale's supply is going to cut off. It's the opposite. So now it's a question of what ends those substantial trends of excess supply, decreasing demand. The key thing, the fact is in the US, is the way things are right now, the US has to export most of its crude oil, liquid fuels, natural gas, grains, corn, soybeans, and wheat. If they don't export, certainly we have been heading to a trade war, prices will get pressured lower.
Jose, I wanted just to follow up on that. I mean, we talk about North America there, but the Americas in general, as we go into this, second year now of a downward draft in the oil price, Brent, looking like it's going to average, most forecasts around 70 this year, putting WTI down in the mid 60s. What does that do to the Americas production? Deep water off Brazil, more expensive production in Colombia, Guyana. What does that look like? Does that sustain? Does it grow?
Yeah, well, it's never a dull or boring moment for South America's energy industry. We're seeing kind of different negative situations going on recently in different countries in South America. You have a protracted fuel shortage, prices in Bolivia, for example, due to the reducing gas production in the country. You're seeing Colombia facing different problems, as we saw recently, how Fitch Ratings gave a negative note to Ecopetrol, for example, the state Colombian oil petroleum company. We're seeing, I would take out two countries out of these mess, Brazil and Guyana. Brazil recently has been, according to an Institute of Biofuels in Brazil, has been exporting for the first time ever more than 50% of its total oil production to Europe, becoming a net exporter of oil. Also, Guyana recently, according to the recent report, has been exporting around 600,000 barrels to Europe. So definitely take out those countries, those two countries out of these mess. We're seeing also how Peru is experiencing problems with its state-owned company Petroperú. Argentina is also facing a little bit of problems, but definitely that's also another country that it could face a new golden age, according to different measures that Javier Milei is taking and carrying out in the Vaca Muerta field, for example, that Cow shale gas field. But definitely that's the picture in South America. And of course, low prices per barrel would affect definitely the different projects that have been advancing in the region.
Let's go to the survey question this morning and see where the news of the day really is. The ceasefire after the talks yesterday between Trump and Putin didn't really get the breakthrough. A lot of expectations set up by the administration's sort of pre-conference call comments. Will a ceasefire in Ukraine move Brent back below $70 a barrel? Is that the sort of the piece of the puzzle that anchors it with a 6 handle rather than a 7 handle, which seems to be where the downward draft wants to be? Mukesh, sitting out there and delightful. I see the Sydney Opera House right behind you, so I don't want to keep you from getting to the opera. I'm sure they're on shortly, but nonetheless, where is Asian demand going? We've had some signals out of China. We kind of started the year with the bearish tone that that China is going to disappoint on the demand side. And yet there does seem to be an increasingly determined effort by the government there to make its stimulus program successful and continuous and relentless as they continue to pursue, and particularly on consumption and consumer spending. Your thoughts on where China could get to this year? Should we maintain our somewhat bearish sense of their demand outlook?
I would say, Sean, that yes, we maintain at a net number the same level of Chinese demand outlook. You can add some, but it would be small numbers. The real thing in China is it's the petrochemical feedstocks, and the other sector is probably increasing, whereas the fuel side will decrease. So that's why the net, I would say, is a bit flat or very small increase. And I don't see that there will be, until the China-US trade wars resolves or something happens, I don't see those effects from China, which they are trying to do, will bear fruit. I know 4% of the GDP is quite a deficit. They are planning to even maintain the 5% growth. But at this point of time, I would say let's rule out China pulling any demand, sort of a surprise. But I would add that in terms of the Asian, Asian refining systems demand for crude oil, that is still going to be quite steady. At this point of time, about 31.3 million barrels per day. And then in the middle of the year, the similar or another 300, 400 KBD more. So Asia's crude demand is steady because Asia has to produce the products as the summer demand approaches in the Atlantic region. And we'll have to get the products from Asian system toward the west of Suez. So even if the domestic demand in Asia does not, and China does not pull through, the crude demand will be steady.
Just to follow up on that from an Asia demand point of view, Mukesh, where is the sensitivity or not regarding the dark fleet, the accommodating of sort of sanction violation, if you like, from a point of view of as defined by the US government? A lot of new sanctions came in the late Biden days on certain ships of the dark fleet, and now we've got Iran coming under sort of increasingly pressure from the US. Where is the appetite in Asia to continue to sort of defy these unilateral sanctions?
I think that if the sanctions would have just happened and situation happens and Trump comes and wants to, now I believe these trade flows have become entrenched, right? This is not a few months story. Now we have been living in this situation since I guess a long time. So I think to undo with sanctions, I think is a difficult thing to do. And probably I also believe that if you are sanctioning and putting tariffs on Canada, Mexico, Venezuela, and you also tighten a lot of these sanctions in this part of the world, ultimately you will cause a product crisis in the Atlantic basin, and the pump prices would go high. So I guess there is, in my view, possibly a deliberate thing to not tighten these sanctions too much. Otherwise, it will end up sanctioning sort of yourself.
Mike, I don't want to put you on the spot because I know you're not a geopolitical analyst, but I wondered if you could just give us some sense of the sort of local flavor on the ground in the US about, we're trying to understand from this distance what sort of parameters Trump is under in these negotiations with Putin. Are there any? The view generally from this side of the pond, so to speak, is that Trump is willing or more or less willing to give a lot to what Putin wants. Is that the case in America? Does he have that political bandwidth that he could essentially just deliver the Putin wish list?
Right now, in America, Trump is king, at least for now, and he knows it. He got his second chance. He's been elected. He's got to move fast and break things, or this is his last chance. And at least the view here is at least he's trying to do something. There was 3 years of nothing. There was no chance of peace. At least he's trying to do something. Most people do not agree with his views on Putin. Remember, Russia was the Soviet Union was the arch enemy. People like I grew up with duck and cover. But at least he's trying to do something. The key thing I think people are underestimating is heading the U.S. government right now are 3 of the most clever sharks on the planet. That's Trump, Musk, and Lutnick.
They're certainly smart at certain things, but they're not smart at everything.
I didn't say smart. I said clever.
Clever.
I just it's
Well, even
clever.
clever, one would think. But
They-
yeah,
these are sharks. These are Wall Street sharks. I mean, Lutnick and Trump are. I've worked on Wall Street for 30 years, and Lutnick was not one of the most hated people in Wall Street because he's just a shark. So I would just not underestimate.
seems
these
a bit
people.
of a loose
They have
cannon
complete
to me
control.
when I hear him talk on Bloomberg TV. Sort of, he loses the plot a lot. He kind of, the steam rises from his ears quite quickly.
Exactly. So my point is, I don't want to be, my view is I just want to be in the same foxhole with them.
Mm. Let me ask another way of the same question, perhaps. US LNG has been a big winner of Europe turning away from pipeline gas from Russia. How does that circle get squared in a ceasefire, in a deal with Russia, in the end of a war in Ukraine, and pipeline gas is back on the market? It does seem to be not the greatest gift to US multi-billion-dollar investment in LNG.
Probably not. I mean, the key thing I see there is the European natural gas prices going back under pressure and maybe heading towards closer to U.S. Natural gas prices. But, you know, that's also assumes we're going to have complete détente with Mr. Putin, which I doubt. But the key, let's look at the facts of the way I see U.S. natural gas is we have to export about 20% of it. Now, half of that is through pipeline, half of that is through LNG. So LNG is only 10% of U.S. net exports. So that's going to increase. It's been increasing for decades. The point is, though, there's still a massive excess of supply. The whole entire state of New York still hasn't opened up to its natural gas. So there's still a lot of excess supply. And the key thing about natural gas in this country is every time it goes above 4, it goes back down to 2. And we have a motivated government for it to go back down towards $2 per MMBTU for U.S. natural gas.
Jose, last word with you this morning, just to come back where we started. Is there any chance, is there any talk in Venezuela that they can get Trump back on board, that they can, the Maduro government could do X or Y to sort of meet the Trump administration's demands on migrant workers or any other of the standing issues?
For now, I don't think so, because you also have the situation with Guyana, the stand-up with Guyana after a Venezuelan Navy patrol approached an Exxon oil producing platform recently, the first of March actually. I mean, because you also have the U.S. government supporting the Guyanese government and many governments in Europe as well. So definitely have that, also that crisis brewing and on the table as well, because I mean, it involves the other U.S. oil company, Exxon. So definitely, I don't think that there's going to be any retracting or any kind of rethinking about that decision of revoking the license to Chevron, okay? Because I think the next week is...
Well, that's from the American side, but what about the Maduro side? I'm just trying to understand, is there anything in the local noise that says Maduro is going to try and overcome this decision? He's going to say, send me all of your Latino migrants. We'll take everybody, not just the Venezuelans. I mean, is there anything he's willing to do to try and get this Trump Chevron license back?
That's what his intentions is, because he's been saying that he's tremendously interested in having Chevron to stay. I mean, he's not, of course, he's not interested in having Chevron leave. I mean, and that's why the government has been making moves in trying to portray and show that they are interested in bringing those migrants back, you know?
Well, we're going to have to wait and see there. I think it is probably a fluid situation. Nothing's ever over in Trump land until the next decision. While the Chinese are playing chess, Trump is flipping a coin each day with heads or tails. Will a ceasefire in Ukraine move Brent back below 70? Yes, 2-1 in this room. Let's see where that goes through the course of the day on social media. Mike McGlone, as always, you're awesome. Thank you so much for joining us from the exotic Caribbean of Miami, of Florida. Mukesh Sadev from another Pacific place on all of you guys on these lovely places. Jose Shalhoub also there near the other oceans, all of the oceans people, all the beautiful places. Thank you guys. Look forward to catching up with you all soon again. Take care.
Thanks, Sean.
Thank you very much.
Bye.
Gracias.